All right, all right, all right. Here we are, special live stream, 3 p.m. Pacific Standard Time on a Wednesday rather than a Monday, because today was Fed Day. The Fed not only, announced their 50 basis point rate hike, which we all probably expected, at least ones of us that were paying attention and following this kind of stuff. More importantly, what they said, right? And we knew that what they said was going to be as important, likely more important than what they actually did, right? So their talk about how they're going to run mortgage-backed securities off their balance sheet, when they're going to start, all that stuff was important. Most important thing, I think, of all of the 48 minutes that I watched Jerome Powell speaking and answering questions, just a side note, like the people that asked these questions nailed it today. Just really good questions and really like straightforward. Like, do you think that like the Fed's reputation is good? Right? Like referring to like, hey, you guys kind of dropped the ball in a lot of people's eyes. Like, do you think you have a good reputation on the street? Anyhow, the most important thing in my mind, and the thing that moved the market in a way that helped mortgage rates, was them saying like, listen, we're not considering a 75 basis point rate hike. He literally said it's off the table. And so that was something that was friendly towards bonds. If I pull up, I'll pull this up for everybody just so you can see what mortgage rates look like today. Markets overview. Because ever since that announcement, we've been pretty green. We haven't seen green in a while. Before everybody gets too excited, I'll let you know it's not going to translate to much more than like an eighth better in mortgage rates. But over here, you'll see 59 basis point with a green arrow. That means mortgage bonds have 59 basis points better than the open, right? What they opened at. And so, this downward trend in mortgage-backed securities, which like this is February, mid-February, this downward trend equals higher interest rates. And then bink, a nice big green arrow. Don't think that any one day that's green is going to make up for all the red we've seen, since February and even before that, right? Like this is going to be an eighth, right? The 30-year fixed is going to go from 5.6 to 5.45, something to that effect. But it's still a green day, and it's a little bit of relief for people that are looking to buy in the near future. So a little bit of good news for people who are currently in the market, right? I think we'll probably jump into some Q&A. We didn't get to do any on Monday. If you have questions about today's Fed meeting, I'll probably put out a video that comes out tomorrow talking about what we see for the future. I've had so many real estate conversations, so many mortgage conversations. I think that there's, a lot of stuff moving and changing, both in mortgage and in mortgage rates and in housing inventory and in housing demand, housing supply, all of it, right? So many moving pieces that like, the one thing we know for certain is we're going to have an interesting year, right? I literally went to an afternoon session with a room full of realtors, had a great speaker talking to them about how to get more listings. And, there's a lot of things playing into how fast people move. One of those things being 33% of people have a rate 3% or lower. 50% of people have a rate 3.5% or lower. I literally talked to a real estate broker who was in the same boat I am, where it's like, hey, I'd like to move in a little bit bigger house, a little bit more room, a little nicer neighborhood. I can afford it. My family's, a little bit tight in our current quarters. But if I go from current housing to upgraded housing, 2.5% interest rate, that's what I've got on my primary, to a, 5% plus, what does that look like from a mortgage perspective? Higher property taxes, higher homeowners, higher interest rate, right? And to take a segment out of motivated buyers where it's like don't have to move but could or would. Those folks might not be buying. Folks that are on the very entry level who might not qualify anymore at all, like that's going to be a drag on the demand side, right? And then on the I see supply destruction as well, right? And that's why I wouldn't expect prices to come down. If demand destruction happens and supply destruction happens, and by supply destruction, I'm talking about not as many people moving, not as many houses turning over, things like that, right? To where there's not enough supply. You can have, and this was a point that was made today, you can have low inventory, but still have 5.6 million homes sell this year, right? Which is like an average year in real estate, maybe above average. And I think people are getting confused. Like there's less active inventory because something gets listed and there's enough demand to where it sells relatively quick, right? If we had 3 months worth of inventory or 4 months worth of inventory versus 17 days worth, and it took longer to sell, but we still sold 5.6 million homes in a year, it's the same number. They're just selling slower. Does that make sense? It was an interesting discussion that we had today. Anyhow, what's up, Ryan Lundquist? Good to see you here, brother. Any stats that you have, shoot them out, man, because I know I love them. Other folks love them. Good conversation. We can talk about the Fed meeting and what went on there. We can talk about interest rates, but I think the more interesting conversation might be what's going on in real estate. I know, I can tell you on the mortgage side, applications are down, refinance is down. There's going to be undoubtedly less people willing and able to purchase real estate, right? So demand is going to be down. Like I won't sugarcoat that. It's just, there's so much of it that there's still likely enough demand to where this price increase that went like this, it can take a sharp right turn and be flat. It's not like it has to come down, right? So famous analogy that Ryan and I have both used. I think I originally got it from Barry Habib about a market, that's been going 150 miles an hour, slowing down to 40. It's still going 40, right? If we see 4 or 5% price appreciation, it's still price appreciation. It feels slow because we've been driving so darn fast, but it's still price appreciation. It's still, got the car in drive, right? And going forward, it's not like we're turning around or slamming the thing in reverse and then going backwards 40 miles an hour. All right. Good evening, Kevin Hawthorne. Thanks for joining. Appreciate you being here. Matt Bittner, how's it going? 50 basis points was too small. It might be. It's interesting because I listened with half of my ears to Jerome Powell. I'm like most people, I'm sure, where it's not like, super engaging conversation talking about the economy and some of the granular areas of it. But, they've got a job at the Fed, and he kept going back to he wants monetary policy. He doesn't want to overcorrect, right? 75 basis points, 100, and be so restrictive that he causes, disruption. He uses the term soft landing, right? And so he's like, we're going to have price stability. We're going to get it down to 2% inflation. Our mandates are strong labor market and price stability. But he used that term or that language around, not being too aggressive, right? But then praised Volkner, saying the guy did what he had to do to tame inflation, which I think most of us are probably in agreement that inflation is worse than they initially thought, than we initially thought, than even the headlines or the data might suggest. And it's going to take a lot of action from the Fed to tame that inflation. And, you know, to his point, like we've got a strong labor market, we've got wage inflation, but wage inflation doesn't mean anything if the cost of goods and, you know, CPI is an even higher number, right? If your wages go up 5%, but everything around you goes up 10%, you're not winning, right? You're still on the wrong side of it. So, anyhow, that's that. I don't know. I mean, he said 75 basis points is off the table. He's not even considering it for next time. So we shall see. Carrie, thanks for joining. Parent loan video. See, I did that against the advice of the YouTube algorithm because those are fairly nichey, where a YouTube algorithm doesn't like it, doesn't get as many views because it's for less people. But for you, the subscriber, that's what I'm here for, right? Reach out to us if we can help. I had people confused on that where they were like, oh, no, this is just non-occupant co-borrower. Different thing, right? You can buy a house for your parent. They don't have to be on the loan at all. They can't afford to buy a house. You buy it with your name, your credit, your qualifications. They're the occupant. You get owner-occupant rates and terms without even them being on the loan. All right. Do I wait for a cash out refinance now? I guess this depends on your time horizon, what you're trying to do. I'll give you some honest feedback. Take it with a grain of salt. I'm just some guy on YouTube. NMLS number 1088993. Happen to be a licensed mortgage broker. Happen to do a lot of mortgages. But again, just a guy on YouTube. Short-term rates won't come down, but 6, 12, 18 months from now, I wouldn't be surprised if we were sub 4%. I keep hearing more and more things from people that are smarter than me, more connected than me, about mortgage interest rates going down in the future. Today, I heard some wild, I wouldn't call it conspiracy theory, but I heard something along the lines of this is what we're going to see this summer. And listen, I'm just the messenger, right? We're going to see them come out and say, oh, hey, by the way, we've been in a recession. Not like we're headed to one or anything like that. We've been in one. And in response to the fact that we've been in a recession, we're going to have policy that forces interest rates back down. And this theory, right, is that they didn't expect what they were doing to raise rates as fast as it did. They didn't expect rates to go up as fast as they did. And so by the summer, they're going to pull back interest rates, make people happy, and then say, look at us. Look what we did. We fixed it. We were in a recession. We pulled interest rates down. We stimulated the economy. We fixed it. We're all good. Whether that's political, whether that's all speculation and conspiracy theory, I don't know. Person who told me today was like, listen, this is like behind closed doors, smart dudes, decision maker type folks. Who knows, man? I'm just living in the matrix. All right, Drew. So much more housing inventory staying on the market now. As an investor, I'm ready and doing the work looking. I haven't seen so many seller finance deals popping up since the beginning of 2020. You mean listings are popping up and seller finance is an option? It could be. It could be something that, you know, here's something to think about as an investor. And I literally just like this just came to my mind right now. If you're somebody who gained a ton of equity, say you're 77 years old and your house went from 400,000 to 800,000 in the last 5, 6, 8, 10 years. Tons of people had their homes double in value in the last 5 to 7 years. Just a lot of markets were that hot. And you've got no debt on it. If you were going to sell it, it might be a big taxable event. Sure, you're a single person with an exemption of 250,000 or a couple with an exemption of 500,000. But if you're somebody who is going to have a $600,000 windfall and have to pay taxes on 350,000 of that, capital gains tax, maybe as a seller who's retiring and moving to Tennessee with your daughter, you say, I'll seller finance this. It'll work like an annuity, and I'll get your down payment as a chunk right now for my relocation costs to Tennessee with my daughter, and then I'll get a $2,750 mortgage payment every month, which will act like an annuity in retirement. I don't know. Maybe some people are opting for that because would that work if you seller finance to avoid tax? I think so. I don't know. Again, not tax advisor, not CPA. Just a guy on YouTube, but some thoughts, right? There's going to be some creative things going on in a market that's changing. Drew A. My rate at the end of 2021 was 2.875. I know rates were lower. I just got pinged from an investor client of mine, was like, look at this, Matt. You got me a 3.6 on an investment duplex in October. Investment duplexes are not 3.6 anymore. I can tell you that much. Holy guacamole. That escalated quickly, right? Irish talks. I know it varies, but what is typical cost or range of cost to extend a rate lock? Have a feeling my builder is not going to finish before a rate lock. This is a hard one to answer, Irish talks, because the costs involved in the rate lock are going to depend on, one, the lender, two, the difference in rate on the day we're trying to extend versus when you locked it, right? We used to be in an environment where rates are getting better and you can extend a rate for next to nothing, right? We're in an environment now where the opposite is happening. You locked it at 4.25. You're coming up on your 180-day rate lock or whatever the heck it is. And now rates are at 5.5 for your scenario. It's probably going to be expensive to extend that lock. And it can vary widely where I don't even necessarily want to throw something out there, but I would expect it to be expensive. By expensive, you got a $400,000 loan. It might be a point to extend that lock for 30 or 60 days, meaning a $4,000 cost. I'm in some senses just guessing because there's variables involved, right? Every lender is going to be different on their rate lock policy. Every lender is going to be different on how they price those things. And also it depends. Like if you locked it 60 days ago, it might not be as much of a move, but if you locked it 90 or 180 days ago, it might be a bigger move. So those are the things that are going to factor into how expensive it's going to be. True story. Lots of jobs being lost on the refinance side, as you would expect, right? Like I talked to somebody today, 2020, 2021, roughly 4 trillion in mortgage originations each year, 3.9 trillion-ish. This year, 2.6 trillion. That is some quick math, 35% decrease in total originations. Any mortgage shop, any lender that was beefed up to do refinance, and trust me, the better.coms, the Rockets, the ones that are churn and burn, call center, selling folks, are laying off all the staff that they had built up to churn as much refinance as they possibly could. So those ones are downsizing. Mortgage companies that are built for serving consumers and purchase deals and whatnot, like those are actually growing. Companies like mine are hiring, right? Because we operate differently. There's also some interesting stuff happening in mergers and acquisitions where if you like from the top down, right? If you own a mortgage company and you're 72 years old and you just came off the 2 best years in mortgage history, retire, hang it up, man. Like those are the best 2 years ever. You just won back-to-back championships. Almost any mortgage company did, right? And so hang it up, sell, merge with somebody, do whatever you're going to do. And I don't blame these folks, right? Like you see mergers and acquisitions. I'm not mad. There's going to be a little bit of a changing of the guard. And I've heard this from industry veterans who aren't mad about it, right? A 41-year-old Matt, the mortgage guy, or a 35-year-old folk, up and like somebody who's energized and got new ideas and a little bit closer to tech and marketing and all these other things are taking the reins of the mortgage industry, right? There's going to be loan originators that are hired that are 22 and 25 and 28, right? They're reaching the consumer via TikTok and other platforms. They've got like all the tech that all the millennials that are going to buy over the next 3 to 5 years, they want, right? They want technology to look at rate quotes. They want technology for an application and for uploading docs and for the mortgage experience. That is a bunch of new blood, new guard coming into the mortgage industry. And the folks that have been doing it forever that paved the way, good for you. Get your bag. Get to that golf course and enjoy. All right. Ryan Lundquist, thanks for joining, man. I always love the insight. The market really seemed to hit an inflection a few weeks ago. Agree, 100%. The sentiment has changed very quickly. More price reductions, fewer offers, and more power to buyers. No really alarming stats yet. I agree. And like trying to look at pendings or trying to look at anything else, like the data is too old. I had this conversation today to really start to see what's happening in today's market yet. But like you, I'm sure, Ryan, and like a lot of agent partners I have, the conversations are showing change, right? I talk to listing agents and I know markets and neighborhoods that I work in. And I say, hey, I saw you got a contract. How many offers you get? I thought I'd get a lot more. I only got 2. Hey, I saw that awesome listing that you put up last Thursday. How are things? It's been kind of quiet, right? I think we might have to do a price reduction. And, on the buy side, we had 5 or 6 people getting a contract over the weekend. In a market as tough as this one, we would have 10, 12 offers go out sometimes and only get 1 or 2 people in contract. So for sure, 100%, things are changing. It's not necessarily alarming, crash, whatever. But like I said, we go from a market like this to a market like this. It's a turn. It's a turn. I feel it. Anybody who's doing business on a daily basis feels it. Ryan Lundquist, who is in the, stats and talking to real estate agents, I know you feel it too. While we're on the subject, Mr. Ryan Lundquist, we got to give at least one shout out to SacramentoAppraisalBlog.com. Anybody who's watching from, Sacramento, you probably already subscribe. Sacramento Appraisal Blog. You get the updates of all the great blogs that come out. You probably follow Sac Appraiser on Twitter and Instagram. But if you don't, you got to get Sac Appraiser on Twitter and Instagram. You got to go to SacramentoAppraisalBlog.com to look up all that cool stuff. Great info from my buddy Ryan Lundquist. We got to get on one of these live streams soon, brother. I'm noticing some sellers stuck in the past in January. This is May, though. It's a different market. We've seen a dip in pending contracts. Not an avalanche, but something to watch by the end of the week. I think it was one of your posts, Ryan, where somebody put it really well. They said, buyers want yesterday's rates and sellers want yesterday's prices. Right. So, your neighbor sold and hit a neighborhood record. The seller wants that. Even if that March or April market was different than May, they're looking back and saying, I want that. And my buyers are looking back and saying, February and March, the rates those folks want, that's what I want as well. So it'll be interesting to see. I know for sure it's going to be a healthy adjustment from my perspective for buyers, which is my team. I'm the home team, right? I'm working with buyers. So my only real loyalty is getting buyers into homes, getting investors into homes. I know on the real estate side, you've got buyers you work with and you've got sellers. So for sellers, it's like highest price, quickest close, all the other stuff. I'm just on the buy team, right? And so this is 100% good thing for buyers, a little bit more inventory, a little quelling of demand, all good stuff. Edgar Sanchez, Sacramento real estate professional. Thanks for joining, brother. To your point right here, I went on a rant. If you don't follow Michael Zuber, One Rental at a Time, I'm on his podcast every Wednesday. It gets posted on YouTube, and it's probably out sometime this afternoon. I went on a little bit of a rant about listening to your real estate professional. Just like you're saying here, Edgar, and for people who don't understand what Edgar's trying to say, sellers need to adjust their expectations. Listen to a real estate professional. Here's what's going to happen. I guarantee you this, 100% guarantee. Sellers are going to reach out to a real estate professional, and one of two things is going to happen. They're going to have unrealistic expectations most of the time. That's just how sellers roll. And I can say that because I'm not a real estate professional, so they can't get mad at me. You're unrealistic. You think your house is the best on the block. You think it's worth more than it is. More power to you. We all do, myself probably included. But you're going to have a meeting with a professional like Edgar. You're going to say, listen, this neighbor sold for this. This happened over here. My house is nicer. It's been 2 months, so it's got to be more expensive now. I want to list at $725. My house is worth it. Someone will pay. Edgar, the professional, is going to say, listen, nothing sold for over $700 in this neighborhood. You don't want your house to sit. I suggest you list at $679. If you do, you're going to get quite a bit of action. There's not as many buyers out there. They're not going to trip over themselves. You're not going to have an open house line down the street. That market is no longer here. But you can probably expect to get list or slightly above list. I'm guessing 680 to 685. If you list at the higher price, it's going to sit. We're going to have to reduce the price. It's going to put kind of a stale smell perception to the buyers in the market to this listing. It might take months, and you might settle for 660 3 months from now. I suggest 679. Trust me. I work in this market. I know this market. I'm a professional. If you listen to Edgar, you list at 679, you get 4 offers, and the best one is 690, and you ride off into the sunset. If you get a real estate licensed person who's not a professional, who's not knowledgeable, and they go, okay, Mr. Seller, 725 it is. They just don't want you to, they don't want to cause any issues and miss the listing, right? So they list you at 725. People look at that and they go, I can buy the place down the street for 660. Like, they're not even looking. They're not even asking their agent to walk through, right? So your house sits for 2 weeks and you're like, must be the marketing plan. It must be what my agent, something's wrong, right? My house is worth 720. I know it. It's always price, Mr. Seller, Mrs. Seller. So then after back and forth, you say, fine, I'll reduce it to $699 after 4 weeks. Even at $699, buyers aren't really interested. Stuff is trading at $670, $675 for that. And so it sits some more. Buyers that look at it go 28 days on the market, 33 days on the market, must be something wrong. No thanks. Now you're 3 months in and you're like, gosh, this market has changed. Now you've seen some more data. Now you've seen a 660 sale and a 665. Now you lower it to 670 because you're like, I got to go, right? My house in Tennessee is closed. I'm set to move. I don't want to pay 2 mortgages. You get an offer for 665 and you accept it. A, professional sells your house for 690 and gets it sold in 5 days. B, person who listened to you as a seller listed for 725 and 3 months later you sold for 665. Truth be told, It should have been on the market at 679 in the first place. And the 665 is probably like what past listings have sold at. So it's not like the market's tanking. It's not like the market's going down. It's just flat, but you're trying to shoot up because it was doing that for a while, right? And so now the headlines are price reductions, this, and home, more price reductions than ever. It's because of the unrealistic seller that went to 725 and an agent that let him do it, right? Not because the market's tanking. It sold at 690 with Edgar. That's my 2 cents, right? And I've seen it enough. I'm not a real estate professional, but I sure do hang around a lot of them. And I sure do pay attention. The hundreds of deals we're closing every year. So hopefully that's helpful. Hopefully that saves somebody. But like I said in that earlier interview, more important than ever. It's always important to have a real estate professional on your side. Right now, in a changing market with things changing literally daily, you can't have somebody who sold their last house in December of 2021. You can't have a real estate agent that does it for fun or part-time or holds their license, but really their passion is yachting. And they're doing that 90% of the time, and 10% of the time they sell a house or two. Just not the market for that. All right, rant over. Thanks for coming to my TED Talk. All right, Joey Garessi, thanks for joining, brother. Good to see you here. I think 50 basis points for now is a safe choice, as we expected. Literally, the Fed did exactly what we expected, right? Like, it was about as on point with like everything we expected. That's why, people are always like, oh, the Fed is going to increase rates by 0.5%. Like, what's that going to do to mortgage rates? Are they going to go up, 50 basis points for tomorrow? No, we already knew, right? We knew this. We knew this was going to happen. Look like no shakeups. Nope. 50 basis points for future meetings as well. Yeah, I think it's going to be like they talked about June. They're going to start running mortgage-backed securities off their balance sheet. That was kind of an expected thing too, where that wasn't really like any big news. I think the talk was conservative, right? And that's where we saw, the 59 basis point positive that we saw today on mortgage-backed securities was because, the Fed, like, 75 basis points, we don't think we're going to need that. And then you can always default to like, we're going to see what happens. We're going to see how the market reacts. Let's talk more real estate market. I love this real estate market stuff. It's fun. Buyers are in a place where it's hard to find a new normal and adjust since rates have kept going up. We saw a very quick change in rates, and we are starting to see a quick market change. Agreed, 100%. Like, people are shell-shocked, Ryan. Like, that's a good, maybe, like, explanation of it. Because before it was like, hey, if I didn't talk to you for 2 months, it might have gone from 3.1 to 3.3. And you're like, okay, $24 a month, no big deal. Now, if you don't talk to me in 2 months, it's like, yeah, I know we looked at 4%. Now it's 5.375. And people are like, oh, what? But I think we might see some stabilization in rates in the near future. Like, maybe we settle between 5.25 and 5.75. I've been seeing price reductions already in my market in the rougher neighborhoods. Has not trickled into the B and A class neighborhoods. Yeah, I mean, and part of the thing about price reductions, I'm just a strong believer in, it's an interesting stat, right? Because a list price is 100% discretionary. Like, you can list it whatever you want. So if a house that should be listed at $299 gets listed at $340, and then there's a price reduction, like, what does that really say about the market? In my opinion, it says more about the agent and the seller than it does the market, right? So yeah, price reductions, funny thing. All right, Joey. Sponsored by Starbucks. I should get a sponsorship. A lot of times I'm just doing my own Temple coffee in the office, or I've got a local realtor, Stephanie. What's the name of that coffee brand? She's got some good coffee that I got to get her deliver me some more. All right. Price reductions have been increasing, but they're not at alarming levels. I think we're so used to stats on steroids. It'll be hard to adjust to more normal stuff. Yeah. I mean, it's going to be, buyers are shell shocked by the price and by the rate. Sellers are going to be shell shocked. Like, what are you talking about? You can't sell my house in 4 hours. And I think what's going to happen, Ryan, is like sellers, wherever they start, if they don't get like all these offers in the first 2, 3, 4 days, like they've been seeing, they're going to be like, what's going on? And a lot of times they're going to blame the wrong person, right? They're going to blame the real estate agent. Like, oh, their marketing didn't do it, or their this didn't do it. Where truth be told, it's probably a matter of price. It's probably a matter of them being unrealistic, but we are in a different market. It's not like a matter of we're heading into one. We're in a different market, whether you like it or not. There's still enough demand to where home prices aren't going down. But I know for sure, looking at certain neighborhoods and certain price points, that for sure always got 10 to 15 offers when it was priced competitively. Now, even priced competitively at a perfect price, realtors I love, respect, and I know that they're doing their sellers justice, are getting 2 offers or 3 offers. And like they've priced it perfectly to get those 3 offers and get their sellers $10K above ask, $20K above ask. But no longer 15 offers where like as a buyer, you got to throw everything at them but the kitchen sink. Oh, that's a good point, Drew. And something that came up in this meeting today. Rents are still rising in my market here in Texas. A 3.2 went up another $150 here. Rent increases. I saw something last year or two, like 28% increase in rents. An interesting stat to look at is vacancy rates on rentals. It's the lowest it's been, I think, since they've ever recorded this number, 0.9%. So less than 1% vacancy rate, meaning like rentals are in high demand. There's very little vacancy. There's very little places available to rent. I can't believe some of the rental prices. I mean, I'm seeing single family homes in Sacramento that aren't mansions renting for $4,000 a month. Wild to me. But if there's enough demand to justify that price, that's what owners of those homes are going to rent them for. It's the lesser of two evils, right? If you think housing is expensive, you're right, but it's expensive to rent, just like it's expensive to buy. You got to afford, or you've got to decide which one you want, because interest rate on renting is 100%. The interest rate on mortgage is still pretty low compared to that 100, right? It's only 5.25 or 5.5. And so, yeah, I mean, that's something that I think we continue to see is rent prices go up, which is going to push folks to want to buy. All right, Garessi, this is a good point, man. Very interesting to see if FHFA, Fannie and Freddie implement some new policies in the near future to give first-time home buyers and lower-income buyers leg up. Already happening for sure. There's new stuff in California and nationwide, really. Less than 80% of the area median income. There's down payment assistance programs. There's buyer programs. The problem with these so far, and more might come along, hopefully they're structured better, is that if you make less than 80% of the AMI, and let's just say for Like, let's say AMI is 80,000, area median income for anyone who's unsure of that. 80% of that is 64 grand. So you got to make less than 64 grand to qualify. Okay. On 5,000 a month, you're not going to qualify for a very big mortgage. So what is it going to be? A $300,000 house? If you can't find anything in California in any decent neighborhood for 300 grand, like what good is that program? So that's one hurdle, but I can tell you with 100% guarantee, Joey, that these programs are being announced. There's going to be more on the way. FHFA, in backroom discussions with the nation's biggest wholesale lenders, I have the, great privilege of having great relationships with a bunch of different wholesale lenders, executives at these lenders. And I was in the room with Home Point, PRMG, and UWM, three of the biggest lenders in the nation. Executives from those three lenders saying that they've been in discussions with FHFA talking about what FHFA plans to do with the money that they've, one way to put it is raised with the loan level price adjustments on second homes and investment properties. They've made those loans more expensive with the sole purpose, reallocate those extra funds to programs aimed at underserved communities, lower income, right? First-time home buyers, things like that. So 100% guarantee those things are coming. Just a matter of when, what, and how. So we'll see what happens. Hey, Carrie, this is for a primary residence only. And again, not a CPA, not tax advice, but I know this one because it's fairly common. If you are selling your primary residence and you've lived there at least 2 of the last 5 years, if you're an individual, the first $250,000 in capital gains, I paid $200, I'm selling for $450. You're excluded, and not having to pay capital gains because it's your primary residence. If you're a couple, a married couple of 2, you get that $250 twice. You get $500,000. So you could buy for $400, sell for $900, 0 capital gains. Got to be your primary residence. You have to have lived in it 2 of the last 5 years. And that's important because maybe you moved out a year and a half ago, but you lived in it the 10 years prior to that. You could still sell it and get that exclusion. But you can't move out of it and then 5 years later sell it because you haven't lived in it 2 of the last 5. Does not work on investment properties. Sorry. Thanks for the assist here, Drew. 121 exclusion. Sounds legit. So yeah, look that up. Talk to a CPA. Won't work on investment properties. It is only on your primary. What's up, Casa? Fearless leader of U Mortgage. Good to see you here, brother. Big things coming out of U Mortgage. I should have the link to the recruitment call tomorrow if anyone wants to join us. Thursday, 2 p.m. Eastern, 11 p.m. Pacific Standard Time, 11 a.m. I'm sorry. We're not doing it that late, even though we are working round the clock to serve folks all around the country. But recruiting call for U Mortgage tomorrow. Yours truly is going to be on there with our buddy Sean Hammond in recruiting. Talk about all the great things we're doing over at U Mortgage. All right, June POC. Do you think rates will go down the next month now? No. Today was, for all intents and purposes, fairly, normal volatility where folks will tell you that the long-term trend is up for mortgage interest rates. Will they be lower in 12 months? They might well be, right? And so I wouldn't necessarily advise somebody who's buying right now to pay 2 points to buy their rate down to 4.5, right? I saw something the other day. Somebody sent me a loan estimate from Texas, and their loan originator was having them pay 3.75 points up front to buy the rate down to 4.5. Don't do that. Number of reasons you don't want to do that. It's a sunk cost that you can't get back, but the simplest explanation for it is if you can refinance into that 4.5 or even lower 12 months from now or 18 months from now, all the money you spent today is gone. It's a sunk cost. Next month, I don't think rates are lower. They won't be lower in any significant way. No chance on earth you're going to have a 4.5% rate a month from now. So if you're asking because a refinance doesn't make sense now, but you want to see if it makes sense a month from now, or if you're like everybody I talked to in 2020 and 2021, where they're like, I'm going to time it. I want the very lowest rate. If I talk to you in August and I'm like 2.625, you've got to do this. Like 30-year rates just cannot get much lower. And then you waited and they went up a little bit. Like, I'm going to wait till it gets back down to 2.6. And then went up and went up, went up. And then by the time you were really ready, it was 3.875 and you had done missed the train. Don't do that. If it's refinance, then you just got to decide whether it makes sense now. And if it does, and if you like it, lock it. If it doesn't, then it doesn't. But no significant downward pressure on interest rates anytime soon is my final answer. Graciel Menor, happy hump day. Thanks for joining. They need to take the emotion out of the process and focus on the data and logic. I'm guessing you're talking about the Fed. I agree. And I think that Jerome Powell, for the most part, does, right? I think he's, got his script down, right? He's like, here's the objective. We're trying to get to 2% inflation. We want price stability. We want maximum employment. And they're pulling levers, quantitative tightening and what they're doing with a purpose, right? Without a lot of emotion involved in it. I think if there was more emotion, they would be a little bit more aggressive. Because I think that a lot of people have indirectly or directly talked smack to them. Be like, you guys missed it. You guys talked about transitory inflation. It wasn't transitory, bro. You done effed up. You got to fix it. And so if they were, acting out of emotion, they'd be like, bam, 1% increase the Fed funds rate. Bam, 0.75. But I think, they're trying to do their soft landing, 50 basis points here, 50 basis points next month. I guess we gonna see. All right, Kyle in PA. We wanted to build a house in a subdivision that was $300K a year ago. Same exact model is now $400K and rates are 5.5. Woo! I mean, this is crazy to think about, right? From the buyer's perspective. And I truth be told, feel for you, Kyle. I've had a lot of conversations like this where it sucks for the buyer. The only lesson here is that, like, if you're in a position where it makes financial sense to you to buy and you're qualified to buy, you shouldn't necessarily be waiting. And I know that, like, somebody who's listening to me talk saying, no, you're a mortgage broker. You're always going to say that, right? And we can't base today's decisions on the past because the next year is not going to be the same. I agree, right? It's not going to go to 4,000. It's not going to be a $500,000 house with a 7.5% interest rate. I don't believe that either. But I do believe that focusing on interest rate, focusing on the things that we can't necessarily control is not how you go about it as a buyer. I think as a buyer, you look at your personal situation and scenario. I make $8,000 a month. I take home this. These are my bills. I can afford this payment. I know I can because I paid $2,200 a month in rent. Here's what a mortgage is going to look like at this purchase price with this down payment, with this interest rate. Does it make sense for me and my budget, my family, and all the other things? And if it does, proceed, right? Because the reason why you're buying is because you understand homes appreciate over time. Next month, next year, matters none. 5-year, 10-year, 20-year horizon, that's what you're worried about. If you're moving in a year from now, don't buy. I'm fine with that, right? But if you're going to stay in a neighborhood for 10, 15, 20 years, I promise you it's going to appreciate. I promise you your balance on your loan is going to go down every month when you pay it, right? And so all the fundamental stuff that makes real estate a great long-term investment still apply. whether the interest rate is 5.5, 7.5, 2.5, or 13. But for your specific scenario, Kyle, sorry, man, it sucks. A lot of people are in that position, and it's tough. The rate would barely matter if houses only cost 3 times the median household income. I blame lazy boomers. All right. All right. Mark Avila, thanks for joining, brother. Another local real estate agent. And, if you list at an aggressive price, a lower price, you're going to create a little bit of a bidding war. You're going to let the market set the price. We've lived in this weird, crazy market where you could list it almost any price and you've got action. And I think Mark would agree. I think Edgar would agree. I think Ryan would agree. I think any of the agent partners that I work with would agree. We are no longer in that market. You can't just set any price and hope to win. Like, a true strategy is going to have to be in place from a pricing perspective, from a marketing perspective. I know personally agents that have been so accustomed to list on Thursday, 2 good offers come in on Friday. You know what? These are great offers. I'm going to wait out the weekend and see what happens because better offers might come in. In the past, they did. 6 offers came in before Monday, and now you've got like a couple people competing and you get 20,000 more. In a different market, the 2 great offers come in, you might consider taking one of them, right? You might not wait through the weekend. Those offers might not come. One of those offers from Friday might have an expiration date on it. They might say, listen, by Sunday, we had already viewed another place, put another offer. We're retracting that offer we put in on Friday. So it's just more evidence or more reason to make sure as a consumer, you're dealing with a professional who's in it all day, every day, got their finger on the pulse of the market, is going to give you good advice. Yvonne Bailey. VA buyer here, and I want to say I lucked out with going under contract at the end of March with a favorable low rate. And even though the appraisal came in low, seller and I came to terms. First-time home buyer. Congrats, Yvonne. I want to say congratulations because you're a first-time buyer. I want to say congratulations because you got a VA offer accepted. I want to say thank you for your service because being eligible for a VA loan means that, you serve this great country of ours. And I love hearing these success stories. If anybody else has success stories, please. This forum is for questions. This forum is for discussions. This forum is also for celebrating folks who, even in a tough market, are winning. I got a message from my buddy Miguel Ochoa talking about like deals are still out there to be had if you do the work, right? You just got to do the work. Matt Bittner, what are the current rates? Have they gone up much due to the hike? They've gone down, Matt. More evidence that the Fed funds rate does not directly correlate to mortgage interest rates. Let me see if, I don't think they updated. I think we'll see like that daily survey rate on Mortgage News Daily. That won't update until tomorrow. But I can tell you from just my the daily rate survey of today was like 5.5. I bet you it comes out tomorrow, and I bet it's 5.4. May 3rd was 5.54. May 2nd was 5.55. End of last week was in the 5.4 range. It's going to be back to about 5.4. And this daily rate survey that's on Mortgage News Daily, I'll show you guys real quick if you don't know what I'm talking about. I go to this quite often. It just says easy, right? It's Mortgage News Daily. You click on 30-year rates. Not sure if this is big enough for folks to see, but this daily rate is just a daily survey. 5.5% on a 30-year fix with 0.4 points in cost. Look at that. That's the year over year number. It's up 2.4% year over year. And like this comes out every day, right? So you can see like the daily change, what it was a year ago, and that yearly change plus 2.44%, plus 2.43%. Holy guacamole. Rates are just a little bit higher than they were, but actually down since the Fed funds rate hike, which we saw today, May 4th. May the 4th be with you. Stop sharing. All right. Oh, Drew A. I got pre-approved for my second investment property through UMortgage. Very easy, and they're on point and quick to respond with everything I asked for. Shout out to Hunter. Thank you for that feedback. I truly appreciate it. I got to give my boy Hunter some props. Let me do a quick photo op here. Let's see if we can read that. Hunter is going to be happy to hear that. Hardworking kid. I appreciate you entrusting in UMortgage. Just know that like when you go to greatmortgagebroker.com and fill out a form, we've got like very dedicated folks that within 24 hours, call, text, email, how can we help, right? We're not trying to sell anything. We're trying to assist as many people as possible. And really, I stand behind like the company as a whole. We're just doing things the right way. We've got operations staff that are second to none. We've got, processors second to none, loan officer assistants second to none. Me and my team, we've always been aligned, right? We just care about people. Like this is like a person behind the deal, right? We're not just looking at individual deals. You'd be surprised at the number of conversations I have every day where I'm like, man, like the reasons behind refinance, the stories behind some of these purchase deals, and I'm not going to share any names or anything, but when you're going to bat for a buyer who's a single mom who wants to live next to the school that her seventh grader goes to, so you can walk to and from school, and like you read the letter to the seller and what's like transpired where a deal fell through last year where they were trying to buy, an off-market deal, and now they're back in the market, but rates are higher and they're right at the top of their range, what they can afford on a monthly basis. But, single mom with 2 children, like it's more than mortgage. So more than Drew, I appreciate the kind words. And like, I'm passionate about mortgage, but behind that, I'm passionate about helping people. Oh, you guys are going to have me all choked up. All right. Thanks, Drew. I appreciate that, man, for sure. Oh, Adam West, look at you, man. I was having an emotional moment. Then you got to come in with the jokes. I mean, I'm knocking on 42, but I'm trying to stay young, keeping up with all you young whippersnappers, UMortgage. If you're buying a mobile or manufactured home with property, how can you be sure the mobile home is affixated to the land and considered real property? How will prospective buyer know? If you're working with a good mortgage broker, just send them the property. We do quite a few of these in Northern California, and it's got to be affixated to a concrete foundation. It's got to be built after 1976. All this stuff, most lenders will deal with. But if you send me a specific property, I'm more than likely going to know at UMortgage. I'm going to send it to my ops staff and say, run this by an underwriter and let us know for sure if this thing is lendable, where we can send it, where we're going to have the best luck. I just closed on a couple of these recently. People are moving out of the city sometimes and onto 5 acres. And there's a lot of property in Northern California on 5 acres. It's a mobile manufactured, right? Not mobile, manufactured home on a concrete foundation. Totally fine. Lender's cool with that, right? On our last closing, we had to get that attestation affixation attestation, basically attesting to say it was affixed to concrete. English language, not my strong point. Math, mortgage, I'm good there. Will that be included in the deed before it is signed over to the new buyer? I'm confused because if the mobile manufactured home is affixed, it doesn't include a title, meaning the buyer could lie. Or you meant seller. I get you. It's all going to be. Let me see if I'm understanding this correctly. Yes, it'll be included in the deed. Like all this stuff is recorded with the title company, right? So as a lender, we're doing our due diligence. I promise. You're not going to close on a house and then find out later, like, oh, it's not like affixed. It's on wheels, and somebody can come take it in the middle of the night. As a lender, we're going to get the attestation. We're going to get the attesting document that it's affixed. We're going to have, like, there's a sticker on the mobile home that says the year it was built. There's all kinds of stuff that ops honestly does, not me. I'm just making sure you get the best rate and best mortgage structure. But yeah, I wouldn't sweat that, right? The lender's going to do plenty of due diligence. You know, truth be told, most of the time they're putting up 80, 90, 95% of the money, and you're only putting up 5%. So they're going to make sure it's good to go. This is a great question. Ninana Kalu, did the hike affect HELOC rates? 100%. And this is where, this Fed funds rate hike is going to increase anything that's tied to, like HELOCs are tied to an index, right? Those rates are going to go up. I just got a notice from Robinhood where like, hey, our margin rates are going up by 0.5%. Of course they are, right? So margin rates, HELOC rates, you're going to see, more expensive like rates across the board, really, with credit cards, with car loans, with all of it. So yes is the short answer. Ooh, we're already at an hour 7. I'm gonna get a few more questions in. True. The lender won't lend on it without confirming it's affixed to a foundation. I know that. Like, we won't close the loan, and the title company won't record it without that attestation that it's affixed. Gosh, I don't know why it's so hard for me to say. Affixation, attestation. All right, let me grab a few more questions because I got to run. I got work to do, guys. I appreciate everyone joining. We went off on a Wednesday instead of a Monday. We got 100 people at once joining. I really appreciate everyone that joined. Every Monday at 3 p.m. Pacific Standard Time, I go live. Let me share this real quick. If you're looking to get pre-approved, I didn't share this the whole time, but greatmortgagebroker.com. That's where you go. Fill out the quick form, where you're at, how we can help. We're licensed in 46 states. We're more than happy to help. As Drew attested to, great folks all over the country. Shout out to Hunter. All right, we got to share some good news. First-time home buyer, Gracielle, closing her home just in time in March. 3% seemed a lot back then, but looking at the rates now, whoa, almost doubled. Crazy market indeed. Congrats. 3% rate is phenomenal. Congrats to you. That's awesome. Yeah, it closed in March, probably locked it in February, got a sweet rate. Congrats to you. Pallavi Patel, thanks for joining. We're wrapping this thing up. I've got some work to do. We got a lot of people in contract. I got to make sure that the team is on each and every file. We're moving things along so we continue to get great feedback from folks. Holy moly. Why did my bank quote me 6.5% interest rate? The first thing wrong with that is bank. I was going to come up with a really good analogy, but basically a bank, you know what it would be like? It would be like, hey, I've got tech issues at my job. I need someone to come look at my computer. I'm going to call my grandpa, right? Versus like, you know, somebody who just graduated college, call them. College, mortgage broker. Grandpa, bank. Grandpa, slow, nice guy. You've known him for a long time, like you've known your bank, but old and slow, antiquated processes, doesn't know his way around a computer. Young person, move fast, knows technology, knows where to get you the smoking deal. That's broker. That's a good place to end it, I think. Thanks for joining, folks. Every Monday at 3 p.m. Pacific Standard Time, join me. Check out the channel if you've got any questions on mortgage. 600 plus videos, trying to educate you, trying to shoot straight from the hip. All things real estate, all things mortgage. If you got questions, feel free to reach out to me. I'm on Instagram, TikTok, YouTube, all the places. Thanks for joining. And until next time, we gonna see.